Here's a little example of what happens when you watch a YouTube channel or whatever it is, right? Some kind of media channel which only supports a singular brand. Everything becomes skewed through a certain type of lens, right? It's like putting on a set of glasses. You see the world through those glasses. Well, very popular Tesla YouTube channel, not solving the money problem, a different one, claimed not long ago that BYD cannot make money selling electric cars, and that in fact it loses money on its electric car sales. I refuted that video, and well, yeah, I was basically ignored. Well, the truth has now come out. BYD does in fact make a profit from its EVs. The real question here is not whether BYD makes a profit from its EVs, but whether Volkswagen, Toyota, or any other legacy automaker currently makes a profit from their EVs. Hello, my friends. Welcome to the channel. I'm the Electric Viking. Great to have you. Thank you for subscribing. It's wonderful to see so many new subscribers. I hope you've had an amazing day. And as a BYD shareholder, I've had a pretty good day. I've just found out BYD's profit increased by, what was it? 240%. Now you might just be thinking, well, that's just because, because demand's been really high for EVs. But if BYD isn't making a profit on its EVs, how did its profit just increase by 241%? Well, clearly they do make a profit on their EVs, which is actually pretty remarkable considering the fact that they increased their prices by a very, very small amount in comparison to pretty much every other manufacturer in the EV industry. On average, by less than 4%. And that's over a 12-month period. Bloomberg reports that BYD's first quarter income has jumped on demand for its electric vehicles. Well, there you go, my Tesla friend. By the way, nothing wrong with loving Tesla, but I love Tesla, as you guys know. But if you only follow one brand, you start to see things in a way that becomes warped. I'd call this confirmation bias. Pretty much everyone watching that YouTube channel, right? I scrolled down to the comment section and it was all, thanks so much. This is what I thought. Oh, I thought this was the case. I knew BYD couldn't do it. Oh, I knew this was impossible. Thanks for letting us know the truth about what's really going on at BYD. All just bogus comments from people who are just being brainwashed by watching a channel that wants to preach to the converted. Confirmation bias. If you watch a channel where it's all just about one brand, don't get me wrong, this is not just Tesla. Plenty of brands do this. Plenty of Ford fans think the same way. Plenty of fans of what? Toyota. They're the worst. Trust me, they are the worst. In this country, Toyota fans are diabolically... I'll stop before I piss off too many people. Anyway, BYD, who, if you don't know, are backed by Warren Buffett, he owns 9% of the company, said that first quarter profits surged buoyed by demand for battery-powered cars as it weathered supply chain kinks from an ongoing semiconductor chip shortage to more expensive raw materials. Its net income rose 241% to 808.4 million yen, or $123 million in the 3 months ended March 31 from a year earlier, the Shenzhen-based company said in a statement on Wednesday. That was at the higher end of the 650 million to 950 million yen preliminary profit announced last week. Sales increased by 63% to 66.8 billion yen. So this is quite an interesting moment in history because this actually confirms to us that right now there is technically only 2 electric car manufacturers on the face of the earth who make a profit selling EVs en masse. There might be some little niche companies in China that do that I don't know about, but there's only 2 mainstream automotive companies on the earth right now that we know make a profit from EVs. Those are Tesla and BYD. XPeng, NIO, all those other Chinese companies, they're currently in the growth phase, building out and aren't really making profits. They may be making profits on their EVs in isolation, but if you include all their development costs and their investment, they aren't making a profit currently. Do we know if Volkswagen's making a profit? We don't know. On their EVs, we have no idea. There's speculation that they lose quite a lot of money on each EV. We don't know that for sure. Ford, do we know if they make a profit on their EVs? We don't know. Right. We can say the same thing for every legacy auto company because none of them are telling us. If they were making a profit on their EVs, I suggest they probably would be telling us the kind of profits they're making. Why would they be doing that? Well, it'd be like saying, well, Tesla's blabbing on. Everyone's blabbing on about just how much profit Tesla makes from its EVs, makes more profit than any car company in history, 31% net margins, way above industry margin average. If there were legacy automakers making anywhere near that profit, or even half of it, even a third of it, I suggest they would have told us about it by now. In addition to this, sales at BYD increased by 63% to 66.8 billion yen. So they're doing a very similar thing to Tesla. They're growing at a rapid rate and they're putting themselves into the black, making a profit. Pretty hard to do, I think, when you're growing at that kind of speed. The sales volume of electric vehicles of the group reached a record high, with market share continuing to increase, achieving rapid year-on-year growth, which led to a significant improvement in profitability and to a certain extent offset the profitability pressure brought by the rise in upstream raw material prices, the company said in its preliminary first quarter earnings filing on April the 19th. I want to point out as well as this, that BYD's electric vehicle sales increased by over 400%, right? Over 400% in the first quarter of 2022 versus the first quarter of 2021. That's pretty damn impressive. In addition, during this quarter, they permanently stopped building gasoline-powered vehicles. Now, they do make plug-in hybrids, but to be fair, they're plug-in hybrids. I mean, they're legit plug-in hybrids. They're not the fake ones that are in Europe where they give you a 40 or 50 kilometer range. I mean, to me, that's a joke. I don't see how that's real because we know from a lot of data shown that around about 50% of the people who buy those cars don't even use them as EVs. They don't even plug them in. However, with most of BYD's plug-in hybrids, the average range is 100 to 250 kilometers on the battery alone. That's completely different ballpark, and it's much better. Personally, I'm not saying you should buy a plug-in hybrid, period. You shouldn't, because it's old technology. Imagine sticking a motor into your mobile phone, right? That's what it'd be like doing, having a motor and a battery and all the electric tech and an exhaust. It's madness. It doesn't make sense. Unless maybe you're driving the thing, I don't know, 1,000 kilometers a day every single day of the year. Then it might save you a bit of time. Otherwise, it doesn't make sense. BYD's diverse range of businesses, which includes chip manufacturing, parts manufacturing, electric vehicle parts manufacturing, mobile phone manufacturing, car manufacturing, and of course, it's the fourth largest battery maker in the world, has allowed it to weather a series of obstacles, from the chip shortage that has plagued the global auto industry to COVID-19 outbreaks that have locked down several Chinese cities and surging commodity prices. BYD raised car prices twice in the first quarter, citing the cost of raw materials. Now, the only thing that's increased really for BYD is the cost of lithium. They don't use cobalt or manganese or nickel in about 98% of their batteries. Yes, they do actually manufacture ternary batteries, but not very many of them. Now, during this period of time, BYD also did something, two very impressive things. One of them, it overtook Volkswagen as the second largest electric vehicle manufacturer on the face of the earth, and it's by a pretty wide margin, so I wouldn't say this is some sort of grasping at straws claim. It's a legit claim. They're now the second biggest in the world, and that's not going to stop. They're not going to give up that lead. I think it's finished. Volkswagen, if they claim they're going to catch back up to BYD, it's as silly as saying they're going to catch up to Tesla. It's not going to happen. Plus, they also rose from being the fifth largest battery company in the world to the fourth largest. By the end of this year, based on their factories that are being built currently, they will likely become the third largest battery manufacturer on the face of planet Earth. This wide range of diversity within BYD's core businesses has helped them come through the supply chain disruptions better than its peers, with monthly sales hitting new incredible records for the company. Bloomberg Intelligence analyst Steve Mann and Joanna Chen noted prior to Wednesday's numbers. They said this: BYD could snag a higher share of China's burgeoning new energy vehicle market as its refreshed battery, electric, and hybrid lineups woo consumers with safer, cheaper lithium iron phosphate blade batteries. For those of you who don't know, short history of BYD, founded in 1995, BYD has grown into one of China's largest EV and battery producers making early bets on the demand for cleaner energy vehicles, stimulated by government plans to reduce carbon emissions. The company's share of new energy vehicle sales reached 17.1% of the entire Chinese market in 2021. Last year, around 3 million electric vehicles, which includes plug-in hybrids, were sold in China, and that's expected to increase to around 6 million this year, according to Bloomberg NEF. One interesting thing I want to point out, this is another advantage to BYD. Shanghai. You might think it's irrelevant. 30 million people live in Shanghai. And during the first quarter of this year, 47% of all vehicles sold in Shanghai were electric. Well, disruption is happening. Volkswagen is losing market share in China. So is Toyota. So is Ford. So is Honda. So are pretty much all the big players except for General Motors, who manufacture the Wuling Hongwan Mini EV with its partners SAIC and Wuling. I cannot say this strongly enough. 53% of all electric vehicles globally are currently sold in China. Nearly 60% of them are manufactured in China. What does that mean for where the global automotive market will be in 2030? Well, I want to know what you think. Let me know in the comments section below. And as always, have a fantastic day. Bye-bye.